The Hedgeless Horseman here. It's February the 7th, 2024. First of all, thanks to my sponsors. Let's dig right in. Markets seem to be up. I haven't followed, I don't follow macro stuff. Not really. I think there was a FOMC meeting last week or something. Or was it this week? I don't know. Something about Fed, which I don't watch. I don't know if much changed. I think there was something about they did not raise rates and yada yada yada. But anyway, it's like, in the stock market, the broader stock market, it's still, good times. Stuff looks kind of overvalued. At least some of the tech stocks. I've seen some gross tweets about Nvidia, just how expensive it is, and also that potentially they're selling a bunch of chips to themselves or something, to their subsidiaries or something that has to do with AI. So they're kind of internally boosting their chip sales. But who knows? Still, metals more subdued, copper down a bit. In my opinion, this is just another example of a day that, the markets are totally financialized. It's not much that makes sense really. It's just money flows and FOMO and all of that good stuff. In my opinion, I doubt the market has been this dumb since, I don't know actually. I just look at what's going on out there in terms of, politics and stuff, and I haven't, as long as I've lived, I haven't seen the amount of batshit, crazy stuff that I've seen just, increasingly so over the last years. To me, it looks like the West, and that's not a shock perhaps, but we're getting on the margin, just ever more impatient, getting totally crazy. People barely know what's up or down anymore. So I think the markets are reflecting that, that the marginal investor slash marginal voter, or whatever you would like to call it, is getting increasingly out of touch with the reality. And the funny thing, of course, is that when we think about these large corporations, and it's like what we as mining investors, we look at some of these, Microsoft or Nvidia or even more software focused companies, and they have on paper an infinite resource, in the sense that Microsoft can copy their software, anybody can download it, so you do it once and then it's just distribution basically. Unlike commodities, where every single mine is has a finite mine life and needs to be replaced, so there's nothing akin to a mine that just goes forever. Some mines have very long lives, obviously, but still it's finite. But the funny thing is, still, when you think about it, none of these companies that make up the S&P 500 or Nasdaq and stuff like that, they're not immortal either, from the sense that whatever they are doing, even if it's a software company, the ones that they are selling it to, and also in their own production, because what they do requires electricity and all that. So every single company on the S&P 500 still relies on commodities. If the mining sector went away tomorrow, civilization would go away. Well, at least after the stockpiles got emptied, and there's not a lot of stockpiles. You've probably seen the LME charts. Some metals have a few days or few weeks of consumption in inventories. So that's one interesting thing. That's like S&P, the Nasdaq bubble, whatever, even every single crypto, everything relies on commodities at the end of the day. That's one thing. It's like that is that's the base of the pyramid. If you don't have commodities, none of these, not even the software-based companies could operate. That's the interesting thing, in my opinion, that we have a kind of rampaging, broader market in the US at least, and Nasdaq and tech and all that. But everything still, those are not exempt from relying on commodities. So basically, the commodities sector, of course, is backing up the entire S&P 500 and every single company beyond that, the Russell 2000, yada yada yada. Every single one of those companies relies on commodities. They would not work if there were no mines. They could not operate if there were no mines. And of course, we've probably never seen a bigger discrepancy. If you remember seeing the commodity to where is it actually? Here it is. Commodity index and the S&P 500 ratio. That kind of says it all. S&P cannot, for example, keep going without mines, without commodities. But obviously that's forgotten. Last time it was even close to being as forgotten as now. Forgetting that reality was the .com bubble. I think that's a perfect analog, and we're gonna look at something else that reminds, basically makes it look like we're around early 2000 time. But that's the thing. It's like people probably forgot that mining was underpinning every single company that people thought would go to the moon back here still needed commodities. And then reality kind of set in, and all of a sudden we get a period where people appreciate that, oh right, it's actually the commodities that are critical, not dogs.com or pets.com, not crypto, and not even Nvidia, even though obviously they make a lot of important chips and all that. But there's a lot of stuff that's probably way overvalued as well. So that's obviously the big play. And that's why you kind of need to find hobbies or something. Else risk losing your mind, because these moves take years. We might be in for, in this case, when gold bottomed in the early 2000s, that went on an 11-year bull market. So, is it impossible that happens? No, that's actually something I am kind of expecting, because we've underinvested so much in mining that when the deficits come and the supplies run out, there is no spigot you can turn on to have commodities just flow. And of course, like people have said, that you really want to have a supply-driven bull, because that's not easy to fix. A demand-driven bull, you can crush demand, and all of a sudden you have a bear market. But if it's supply-driven, even if demand is even, that's still gonna lead to a bull market. Even if demand goes down, that's still gonna be maybe they cancel each other out, and obviously it looks worse and worse the longer ahead we're looking. There's a lot of minerals that are expected to be in big deficits in 2025 and to the later stage of this decade. So that's the fun thing. It's like if we're looking ahead a bit, the tailwinds are actually increasing for commodities, which obviously would be even harder to fix if the deficits gets, the larger the deficits get. If we need 3 Kamoa-Kakula instead of 1, that's not an easy thing to put together. Still, okay, so here I saw this tweet today by John. Holy shit, SG withdrawals in January were the second highest on record at 270 tons. So that's up here, 270 tons. Last time, the only time it was higher than this was here, and I think this is kinda in the middle of 2015. Well, this is, I should have had the original tweet anyway. This is around mid 2015. So the Chinese were perfectly, let's say, greedy on gold. They thought it had max merit at almost the exact right time, because it later on obviously would go up a lot in price, at least in USD, and I think it's done even better in most other currencies. So almost perfect timing. And there was actually fun. I got a comment from someone, player 001. Oh, perfect, just 5 years until it moves then. I think that encapsulates the average retail investor. I mean, basically what he's saying, I guess he means that it took 5 years to go from here to there. And he's obviously complaining about that fact. So when you think about it, what he is actually saying, that even if you were lucky enough, smart enough, whatever, to buy at multi-year lows, the bottom of the last bull, that would still not be good enough in his mind. Do you get a sense that's like, this is retail, or most investors have absolutely outrageous expectations, especially in a given time frame. Most people, 1 in 20, beat the stock market. Not the junior mining sector, the stock market, which is much less volatile. 1 in 20 of active investors beat an index. And I don't know this person. I assume he doesn't do too well if he's complaining that, again, what he means by this is basically that this was a bad buy because it took 5 years for it to go up. I mean, it went up continuously for 5 years, and this guy is complaining that, whoa, that might be in store for us, a 5-year bull market. That is just absolutely crazy to me. But that's what I'm talking about. Totally unrealistic. If I had to guess, I don't think he, does too well. Anytime you see someone just whine, that's basically a sure tell that they don't have much idea about what they're doing. Because that's, that's frustration, that's a sense of loss of control and all of that. And it's not even, what's the word? I mean, what's the word I'm looking for? Anyway, but I hope you get my point. I mean, that's just belly aching. He's not making any form of, argument or anything like that. It's just that what he's basically saying, even if he doesn't understand that himself, is that buying here and seeing this for the next 5 years was not a good turn of events. That is absolutely crazy. That is absolutely crazy. You basically can't time it better than this, and that's not, it didn't go up fast enough. I mean, and again, that says something. It's like most people, they buy stuff when it's going up because they want to get rich tomorrow. And if they see people having gotten rich in the recent time, or in the recent past, they want to tag on to that. They want to get rich. People who buy here thinks that this is going to go up like that, so they get their hundreds of percent in just a couple of months at max. That's what drives most people in investing, because it is absolutely ridiculous, beyond a doubt, or ridiculous how cheap the junior mining sector is. You should not need to be a rocket scientist to figure out that this is the biggest layup probably you might see in your entire life. That doesn't change the fact that almost nobody's buying. And on that note, here from Stock Shaman, here we see volumes in TSXV. Basically the lowest, if we just check the amount of, times the bars didn't reach this blue line here. It's like basically 2023, 2022, 2021. It was even lower way back when, but I think one should adjust for, I don't know, inflation, the amount of money printing, the growth of the world economy and all that. So it is basically the lowest. No, people haven't cared this little about, let's say, mining stocks since 2001, 2, and 3. And here's this chart, same chart, and here you can see it a bit clearer. Here we have a dip, and yeah, if we go back, there's also a period here where it's very low dips going into this low here, and then going kinda to, I don't know, going down to this low here or something. But basically this period and this period has seen volumes as low as this, and you saw what happens after both periods. Yes, there was some downside here, and here was a bit choppy. Then it went on pretty much a tear. So it's like, you cannot make this stuff up. And even more interestingly, so this is the Nasdaq, that's the candles, the candle chart, and I have gold overlaid here, okay? So what do we see in the 2000? Well, we can take this entire period where the volumes in TSXV were as low as they are today. So that's starting here, and yeah, basically over this period here. Obviously that was a pretty good place to buy. And again, it's like the Chinese haven't let's say withdrawn or bought this much gold since here, that they're doing here. And the volumes in the TSXV are the lowest since this period. So it's like, if we're talking, screaming signs that the Chinese are buying, and they're smart, they are not retail investors. They're looking, who knows, like, well, first of all, they look probably, as a safe haven. But at least, the government of China and all that, they're looking in the long-term perspective. They obviously thought that this was cheap based on what they think the future is going to hold. And if there's a lot of buying in China now, that's probably because they see something coming that the Western investor has no idea about. And again, the lowest volumes since here, and here, lo and behold, we had a ramping, well, actually it ended up crashing later, of course, but yeah, we had a sick ramp in the Nasdaq, and we had a sick ramp here as well. And while Nasdaq was crashing, I guess one could say that, well, actually the gold price kind of bottomed here before the final ramp, let's say, and then it was, well, stayed put, sort of. Still, in hindsight, fast forward, 3, 4, 5, 10, 11 years, and it's like, you would have made a shit ton of money. Obviously, miners went up a lot over this period. So it just makes total sense that you have, let's say, Nvidia is grossly overvalued, and most stuff is, a lot of stuff is overvalued. and there's still a lot of interest. Why do people buy Nasdaq here? Obviously because they think it's going to go higher. That's the thing. People buy this because they're thinking about the upside. And the same reason is why nobody's buying junior miners now. Because, well, the flip side of that coin. People buy high because they think about the upside. And people don't buy lows and sell lows because they think about the downside. So everyone focuses on the exact wrong thing at the exact wrong time. And I made a tweet earlier today. It's like, I'm kind of losing my mind. It's like the market should not be this easy. It should not be possible to buy all these assets out there, real assets, for prices that are this low at a time like this. It should not be possible. And people say the market is rational and all that. That is absolute bullshit. The market does the same thing over and over and over again. It goes into bubbles, manias, then crashes, and then bottoms, and then starts going up, and eventually there's a bubble again, and then crashes. It does the same thing all over again. So while there was record amount of interest here, let's say for pets.com, pretty much record low amount of interest for gold. It makes perfect sense. Makes absolute perfect sense because they are kind of the opposite of each other. Artificial, digital, pure hope versus the asset that's been a safe haven for 5,000 years. People are not buying this up here because they think they need a safe haven. They're thinking about the upside. So you can imagine when that changes a bit, which we're seeing in China because they have problems with the property price, property sector and stock market. And lo and behold, people are buying gold. So like when this mean reversion comes, it's not going to be favorable for the Nasdaq. It's going to be incredibly favorable for the commodity sector. And of course the funny part is that people who bought Nasdaq here and are up now, they think they're smart. People who sold gold here, when they were here, they thought they were smart. But they are obviously not, probably not profitable long-term investors. Because a month, a day, a month, a year doesn't mean anything. We've seen that in this sector. We can have, like we are seeing in the mining sector, we have a 3-year bear market. If you lose money in a bear market, that is not something that is surreal or shameful or anything like that. That comes with the territory. You should be, you should be expecting to lose money in a bear market. But the same token, you should not be losing money in a bull market. If you were into miners going from here and stayed for like 10 years and you lost money, you're probably a very, extremely bad at investing. If you lost money in juniors from here to here, well, that doesn't say anything really. Same as if you made, I wasn't a good stock picker when I made money in this run, for example. I just knew it was cheap. Kept on buying, and from out of nowhere, gold, silver bottomed, miners bottomed, then went on I think the best quarterly rally in mining history. The quote bull, just lasted 5 to 8 months or something, so I don't know if you could call that bull. I listened to Willie Middlecoop, and he didn't consider that to be a bull. He thinks this was the last bull basically, and these have just been in the mining space. The rallies we saw in 2020 from crash lows, and this from the bottom here, that's not even bull markets. So imagine what a real bull market is gonna look like if we're coming out of record low. Where is this? With record low volumes. I mean, people can move a stock in some stocks, and I've said this before. Some days I'm the only person in the entire world that is buying some of these resource stocks. That is so fascinating that it's unreal. I mean, legit projects and all that. And there aren't too many legit projects. Yeah, there's like 2,000 juniors, and everybody has a shot or whatever. But still, it's like it's absolutely fascinating. I mean, no wonder. I think I mean, the more I see of this sector, like right now, I have no idea how one is expected to lose in this sector over the long term. And 3 years isn't even long term, because you can if you bought the previous high and rode it until now. Of course, you're gonna probably lose money, especially if you're not a great stock picker, of course. But the thing is that it always changes, like Pierre Lassonde says when he calls it the easiest sector in the world. It always crashes, it always rallies. So it again, it's like things are so cheap now, and I know what's going to happen when the bull comes, and the bull is 100% for sure going to come. You can take that to the bank. We're going to have a bull in the junior mining space. And from these levels, with these volumes, you can just imagine what happens if interest just goes up a bit. If we go from this kind of volume to this kind of volume, let alone this kind of volume. That's going to be, hundreds and hundreds of percent. So that's what's in store someday. So I have no idea how you're expected to lose in this sector over the long term if you have, at face value, infinite patience and common sense. But the thing is, obviously, almost nobody has that, because again, some juniors right now, some days I am the only one buying, and some of these juniors I think are undervalued by, easily 100% at least. That's not a small thing. You can't say that about Nvidia, that it's, I bought it because it's easily undervalued. It should easily be 100% higher. Nobody can really say that about Nvidia, but there's some stuff with margin of safety. And the thing is, not only are many undervalued by 50%, aka they should go up 100% to be even close to fair value, they have growth profiles which might allow them to become 10 to 20 baggers. This is absolutely surreal. It's like you will never, ever, ever see hands this good in poker. The only downside really is that for extended periods of time you might look wrong, and very wrong, aka paper losses, and you might be bored to death. I am bored to death. I'm already thinking I want to do something challenging. This sector is not challenging. All you need is common sense, some due diligence skills. Be a stock picker at least. Don't buy any crap and then just say, well, everything's going to turn out fine and when we get a bull. That's still lazy. Yes, it could turn tomorrow. It could turn in 6 months. You don't want to be bankrupt before that. But companies that don't have any debts, it's hard to go bankrupt without debts, obviously. So it's not as risky as people think it is. People say about dilution, yeah, sure, but still, a lot of these, at least above average juniors, they're so cheap that if they diluted by 50%, it would still not be a problem. They will probably go up hundreds of percent anyway. So that's not really a problem. But people make it a problem because they're looking for excuses not to buy right now. And most people don't have a clue really what stocks to buy. Most just buy whatever leveraged silver producer there is out there that's almost never ever made any money, and then they think, well, you can't beat this sector, yada yada yada. That's not, time is not your friend in that case, really. But they can shoot up hundreds or 1,000% after a bottom. I remember First Majestic down here went up to, I think, 35 or something. I'm not a big fan of First Majestic, but a lot of silver bugs are. So yeah, I just find it boring. It's like it's boring when you know you're gonna win, and all you have to do is be bored and wait. That is absolutely super boring to me. That is no challenge. It took years to appreciate just how dumb this sector is, though. I mean, it took years to appreciate just how much comes down to pure sentiment. That it's literally sentiment and fear and greed and biases by people that lead to these extremes. But when you know that, then all of a sudden everything clicks again. It's like it makes sense why nobody really cares about this sector, because they're all hyped up on tech stocks, and also we have inflation, we have higher rates, and all of that. But still, I mean, it's just mind blowing that one can be the only person in the world who buys a given above average quality junior right now in the entire world. That is, I mean, that is so fascinating. I can't believe my eyes. So of course, why shouldn't? It's like it makes perfect sense why I should be able to beat this market forever, because obviously almost nobody sees this sector right now as a buy. That is absolutely crazy in my eyes. So of course, if I do what 99% of people can't do, it's too hard for them. They can't see it. They're too scared or whatever. I deserve to have better performance than 99% of people. But anytime I, let's say, chicken out or I can't take it anymore, I get too bored, and I basically snatch victory from the snatch defeat from the jaws of victory, then I don't deserve it anymore. That's as simple as it is. You have to earn your returns. And if you do what almost nobody on earth can do, you deserve extremely, not only beating an index, you probably deserve extremely good returns. Because there's not a lot of people that can do that. Obviously, that's why I'm sometimes the only buyer in a certain stock. Almost nobody on earth can buy these juniors right now. The few who can, I think they're gonna make out like bandits. I just don't know when. And that's, when you think about it, kinda irrelevant, because when we go into a bull market, these juniors, they don't go up 100%. They might go up 100% in the first 2 weeks, in the first month. But if we're talking a 10-year bull market, that is absolutely nothing. So think about it. Like, we might have had, one could say that we have had, I'm not going to say a bear market, but it's like a sideways market from 2011 or 2012. That's 12 years of basing. You know what they say, the bigger the base, the higher in space and all that. Like this, for example, big fat gold base, and then boom. And this is, of course, the T6V. It's basically flatline. After shitty markets come good markets. Shitty markets, good markets. Really, really shitty markets. I think this could be a really, really good bull, which might continue from, 10 years. We might be in for a 10-year bull market that can start at any point if it hasn't even started already. We don't know that. We know that in hindsight. We know that the big change is obviously up and not down, because the mining sector is not going to go away. If it goes away, it means S&P 500 is going away. And in that case, we have much bigger problems to worry about, and then it doesn't matter if someone has had 1 billion in Nvidia stock versus you had 10,000 in mining stocks. So it's a moot point, which is great, because that means if we are quote wrong, it doesn't matter, because we're not going to be worse off than anyone else anyway, because everything is going to shit. If the mining sector does not die, which has never happened so far, it's like, look at the BGMI, Barron's Gold Mining Index, 100-year history. I mean, it was around during World War I, World War II. The stock market does not go away, not even during world wars. And to fight a war, you need a lot of metals to boot. They even rationed tin, nickel, and copper and stuff during World War II in the US. So that's not going to go away. That's actually going to be more critical, obviously, than Nvidia or whatever, or crypto, especially. Anyway, so I mean, one of these I think are just no-brainer cheap. Stillwater critical minerals. I think I briefly talked about the company. I got pitched this story by a fellow investor, I think, some months ago. I briefly talked to the CEO at Beaver Creek, and this investor friend, he said, I mean, it's in his words, it was one of the most unbelievably undervalued juniors he knew of. And he beats the market. So whenever he's interested in something, I know it's worth checking out. And I checked it out, and since I don't know 3 weeks ago, I started writing my case for it. And as per usual, almost, it ended up being a lot longer than I thought, because I went into the nickel market, nickel in the US, platinum, palladium, and the palladium in the US, and macro stuff, and a bunch of Rick Rule interviews where he's talking about, when he's asked what's the next uranium, and he doesn't, I was going to say means worse. He says that he has not seen anything as no-brainer cheap in terms of metals as uranium was some 3 years ago or something. Obviously, nowadays, for example, he's made a lot of money on that by recognizing that uranium and uranium stocks were way, way, way too unsustainably cheap 3 years ago. It took him 3 years for the big payday. Was it worth it? Of course it was. That's my point with this comment, for example. I mean, you buy at the lowest point, and if it takes 5 years to make let's say hundreds of percent, of course it's worth it. The market average is 8 to 9% per year over the long term. The mining sector is even worse, because they're they have finite mines, but the stock market 8 to 9% per year. So do you think Rick Rule thought it was worth it to wait 3 years to get, let's say, 300, 400, 500%? Of course. I mean, those compounding rates would be obscene if you could keep that up. And that's the whole point. Nobody's buying these juniors now, because they don't buy when it's cheap. They buy when something has already gone up. That's how it works. And they sell when something has already gone down. That's also how it works. And you know this. You know this. People don't want to buy stuff that's getting cheaper. People want to buy stuff that gets more expensive. Especially they want to buy when it's gotten, let's say, really expensive. Up here, highest volume around the top here. Ramping volumes all the way to the top. People love to buy expensive. People love to buy high. 95% of people, that's all they do, buy high, going from one sector to the next. And there's only a fraction of people that are buying all these lows. Fraction of people. And we know, again, it's like 1 in 20 beat an index. So if you're one of those 1 in 20 who actually recognizes and lets cheapness and valuation dictate your buying, how on earth are you going to lose over the long term when 19 or 20 people do the opposite? 19 out of 20 people are going to pay you one day, and first they are going to sell to you cheap, and then they're going to pay when it gets expensive. As long as you understand how ridiculous the markets are, and that this is basically human emotions at play, and that stuff, no-brainers, they can be no-brainers, but they can stay no-brainers for sometimes years. And the important thing, it's still worth the wait. Rick Rule is laughing now, even though he was probably bagged at the time for saying that uranium stocks, he was so bullish on uranium and uranium stocks. Yeah, it took him up to 3 years to look really right, and he made a shit ton of money from being smart 3 years earlier. So I think we're smart now, and I think we're going to look super, super smart in 3 years, even though if you would ask Rick, I think, for example, he would say that uranium was a no-brainer bet. Like he said, either the lights go out, or the prices of uranium goes up. Uranium prices went up. So obviously, if you would ask him, it's like common sense. Pure common sense and patience, and he made a shit ton of money. Common sense and patience. Common sense to appreciate that something was unsustainably low, bought it, and then held it for 1 to 3 years, and then he made a shit ton of money. And probably has, if there's no way you can have those compounding rates over the long term, but that's what he does. I mean, when you ask him recently, he buys the stuff that people hate. He doesn't. In a recent interview, he said even that like he doesn't care really about the macro. He goes for sentiment first when he's kind of picking sectors. But with that said, he does also dabble in a bunch of metals as long as he sees kind of world-class deposit potential. But think about that. So his bloodhound knows the first thing that he tries to go for is to find what is hated. That's when he gets interested. He likes the most hated stuff. And then, going back to the story, when he was asked about what's the next uranium, he starts talking about nickel, then platinum and palladium. He also mentions silver, and he thinks gold juniors are cheap as well. So it's like, I mean, basically he's saying he likes gold juniors, he's starting to like silver juniors, he likes nickel juniors, he likes palladium, platinum juniors. And what he said, the last one I listened to him when he talked about, I think it was nickel, he said, he expects 2026 to be super good for nickel relative to now, that nickel is probably going to be a lot higher in 2026 than today. And when you hear that, it's like, I think that goes for 99% of people. You hear it's like, it's going to be up a lot in 2026. Well, we're in 2024 now. But that's the same game plan, basically, that he had with uranium. Because we obviously want the biggest delta. If this is when it gets, well, I should... If this is the exciting period, let's say, for gold, people were, first of all, nobody's going to trade it perfectly anyway. Obviously, that didn't matter if it started, to do really well, let's say, from here, the last spurt here. Most people just want to be part of the spurt, and that's why they end up buying high anyway and not selling. They want to be a part of this. But if you bought it, obviously you made a lot of money if you bought Nasdaq here and had this kind of run. But most people want to buy something here, just before it goes absolutely exponential. And you may obviously make money on that, unless you bought high. I mean, you're obviously buying higher than any time before here, really. So you got 57%. If you bought when it was not that hot a few years earlier, let's say, you might have gotten 400%. So that's the thing. That's the urge we have to fight, kinda, to understand that even 100% over 2 years is an absolute fantastic return that very, 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 very few people can sustain over the long term. Most people do not compound their portfolio. I mean, probably less than 1% can compound their portfolio over the long term at 100% every 2 years. But that sounds boring to people. Oh, the fireworks, he is expecting the fireworks in 2026. Yeah, the fireworks maybe. But when the fireworks starts, if you buy cheap enough, you might be up 100, 200% before the fireworks even start. And then the fireworks might have it up 200% more. So that's 3 times 3. It's like 800%. That's the thing. But that's extremely hard to do. I get bored just hearing that. The big payday might be let's say in 2026. But the thing is, of course, like always, the big payday comes from buying when it wasn't hot. You can't buy cheap and enter when it's hot. Those two things are mutually exclusive. So you need to buy probably months or years before it's hot. Then wait months, probably several years, a few at least, for the big bucks. You gotta be that early. Even though what everyone is really doing, and again you can see that on the volume bars, people buy this because they think it's gonna go like that. So I can only imagine what's gonna happen someday. The funny thing is, when we think about what Thomas Kaplan said, that he thinks that, well, if things get even more chaotic in the world economy and geopolitics, he thinks there's going to be a bubble within a bubble in the tier 1 jurisdictions. And we don't have a lot of metals. Canada has obviously mines and stuff, but imagine if something happens between East and West, and I mean the commodity wars go critical. All of a sudden, like I talked about before, you might have demand swamping domestic supply by 10x or something. You can only imagine how valuable some critical minerals and gold and silver and stuff could be then. So yeah, I wrote up a big case about Stillwater critical minerals. This is not investing advice. I mean, I bought it for all the HODL portfolios, all the long-term HODL portfolios. I think it's I think it's gotten into the top 10 of most, because I simply think it's that cheap. I think this is one of the cheapest stores I've ever seen. And it makes perfect sense, because everyone hates nickel. Just look at how cheap magna is. Everyone hates nickel, everyone hates palladium, everyone hates platinum. Stillwater, same with magna, polymetallic deposits, has both nickel, platinum and palladium. So when Rick Rule says he's really liking nickel, palladium and platinum right now because nobody cares about it, and again, going back to his most recent success, which gave him multi-baggers in the uranium space because he bought 3 years ago. I think these valuations for these juniors like Stillwater makes absolutely no sense. They only make sense if nickel, platinum, and palladium is worthless now and will be worthless for the next 5-10 years. Otherwise, it makes no sense, really. So, if I buy today, which I have an average of, I think, slightly over 15 cents for Stillwater. If I could travel in time and come back in 12 to 24 months, I think I could be up a lot in Stillwater. And my ambitious goal is to, over the long run, average 50% returns per year. I think Stillwater for sure can have me, can do at least 100% in 2 years. I know it sounds boring as heck, and I think it could do much better than that. But yeah, so I think this is just absolutely remarkable. That's why the article took such a long time, because I just found kept digging and found new stuff, and it's absolutely crazy how cheap it is. And of course, I mean, you have Glencore, $78 billion company, invested, took the last placement at, I think it was 25 cents or something, and now it's at 14-15 cents. And you see nickel deals flying all over the place. Yeah, I mean, let's say, I'm not saying you should buy this. You should only buy Stillwater if you see a case for it, that you think, hey, I think, I think this is cheap, and I think it could do well. I think the risk reward is there, and I think this could do well over the next, let's say, 6 to 24 months. Only then, if you see the case. Otherwise, don't buy it just because I own it. But I would recommend at least reading it, and I mean, let's say, get a sense of how I think with some of these stories from a risk reward perspective, because it was fun writing it, simply because I mean, you almost shock yourself that I can't understand how we are able to buy real assets, resources in the ground, and resource potential that it's almost worthless and being given away. So this, I don't expect to see. I don't expect to be able to buy juniors this cheap. If I never bought miners were able to buy juniors this cheap for the rest of my life, that would be understandable. That's how ridiculous this market is right now, I think. So some news. Recently had news from Altamira. Reports 88% gold recovery from column leach test on mineralized saprolite. One second. How am I doing? Okay. Can do it like this. Altamira Gold reports 88% gold recovery from column leach tests on mineralized saprolite material from the Maria Bonita gold discovery Cajero project, Brazil. So the saprolite is the overburden. That's the soil, basically. I think they mention, let's see, they have the diameters. I have not yet done any calculations on this, but there's a 0.4 gram per ton gold in soil contour that extends over an area approximately 320 by 270 meters. To date, both diamond and auger drilling, they find the thickness of the saprolite between 4 and 17. I mean, you get the dimensions, and if you do, I don't know what grade you would put, let's say, I mean, you could use 0.4, 0.5, whatever, and you have some kind of volume. I don't know what the specific gravity would be, but probably not a lot. But it's basically loose soil. It's like truck and shovel. It's like you have, I was going to say, sand with gold in it. And they get 88% recovery. This is probably some of the cheapest gold you could mine in the world. The same goes for, I'm going to cover that soon, Cabral, who are also in Brazil and also have this what's it called? Saprolite, right? Yeah, saprolite. So I mean, they don't have any pictures really, but so you have a blanket that sits. I mean, they've been Altamira. They're kind of drilling underneath the blanket. It's the soil anomaly that led them to Maria Bonita. And we know there's an intrusive gold system underneath there. So some of it has been eroded, and the gold is now in loose rocks, or loose rock / soil on top of it. I don't know. You probably don't need to do much crushing. It's obviously readily available. It's not like you have to sink a shaft or do anything. I mean, it sits at surface. You're walking on a gold deposit, and that saprolite gold deposit, or potential gold deposit, sits right on top what could be an extensive bulk deposit of, let's say, around 1 gram per ton intrusive hosted gold deposit. So you could have some of the cheapest gold you could ever mine on top of a gold deposit. So it's like the strip would be gold bearing, or the overburden would be gold bearing, and then you might, at least in some places, which they've shown by 50 meters of 1 gram per ton from surface. I mean, it literally starts right after the saprolite. So it's like, and I've been thinking, and I've been talking to some people who know mining and all that. I mean, some argue that because in my head, Altamira was primarily an exploration story. Well, we know they have 700,000 ounces within Kajeri in another deposit. 700,000 ounces, I think 1.3 grams per ton. And I listened to a Crescat presentation done by Quinton. This was an older one, maybe a few months ago, where he said that they basically drilled 10% of the targets over where they have 700,000 ounces already. And Maria Bonita is a few kilometers away, and you have this saprolite blanket. So do I think there's going to be a mine there? That looks incredibly likely. And you can't say that about many gold juniors, because even if some gold juniors, let's say they find some gold, it might be lode gold. It might, it costs a lot to drill. Whatever, it's way out in the, in the middle of nowhere. There's no roads, etc. That's not the case here. Altamira probably has one of the lowest thresholds for success that I know of, at least exploration success. They probably could make a mine which would, be worth it with their 700,000 ounces already, because it's near surface, pretty good grade for, a disseminated or a bulk mine. But the thing with Maria Bonita was that got me really bullish on Altamira, and still. They have this saprolite, and again, thinking about it, I think if they only found 300,000 ounces of like 1 gram per ton that goes down the first 70 meters or 50 meters or whatever, with basically no strip ratio, that's probably a mine already. 300,000 ounces. So think about it. I mean, I thought it's like, okay, you really want to see, 1 million ounces at Maria Bonita for that to be, you could say it's a mine. No, I think it's actually much lower, and this just boosts everything. Because if you have this, I don't know what the margins would be. Maybe it costs, $500 per ounce to mine and process this stuff, the saprolite. In that case, you could be looking at $1,000 to $1,500 margin on gold ounces. Not like we're talking, millions of ounces or anything like that, but incredibly high margin gold. Even with a small amount, even if you had 30,000 ounces of the saprolite stuff, I think that could be worth quite a lot. I mean, just let's do a calculation. I mean, if you have 30,000 ounces, let's say you have $1,000 margin, that's like 30 million from 30,000 ounces. That's pretty crazy, actually. That's almost their entire market cap right now. Of course, you would need to add, a bit of capex, which would probably be extremely low and all that. But still, it's just, it just comes down to show. I think Altamira is just grossly undervalued, because this saprolite is on top of the 700,000 ounces they already have, plus the Maria Bonita target, which this does not include at all, and which is the main attraction in my eyes, the exploration potential. That hey, this could be maybe a multi-million ounce gold system that starts at surface with potentially great metallurgy, I mean, that's probably going to be worth several hundreds of millions. And could be pretty cheap. It's like, just look at Minera Alamos, for example. They're putting in some mines that are, I mean, deposits that are not large, not a lot of capex, but they're, you know, expected to be quite high margin, very low capex, high margin mines. And if they have such a mine or a deposit, but it's like maybe 1 to 2 million ounces or maybe more, then we're talking probably, you know, quite big bucks actually. And then you have again the 700,000 already, and they have the porphyry targets. So I think, I mean, in my book, Altamira is, I think it's gone up to a top 5 position in most hodl portfolios. I just, like, I've talked about this recently, and when I, you know, it actually touched, I think, 15 or 15.5 cents recently again, and I cannot believe my eyes. Not after the last news release, and now I almost forgot about this stuff. So if we're talking from a, you know, is this sexy? Well, not really perhaps, but is this valuable? Yeah, I mean, this small operation here, or the saprolite, could be worth more than most mines are worth now. Because there's, you know, quite a few mines that are having problem, you know, with profitability. I mean, just look at, it's not gold, but just look at First Majestic. I mean, they barely make any money. And they have a 2 point or around 2 billion market cap, I think. So that's not even a good business at these prices. If you had a bit of this, I think that could be actually a good business. And this ties into Cabral Gold, which recently drilled 30 meters of 2.6 grams per ton in oxidized material from surface at Machichi, 30 meters, 12 meters, including, in mineralized basement saprolite. So they seem to have, Cabral seems to have much beefier saprolite deposit. But I can only imagine the margins on an ounce if you had, you know, 2.6 grams per ton. Not everything is going to be that, of course, but who knows what the cutoff. I think actually they, if I remember correctly, they actually talked about the cutoff. They believe they might need a cutoff. Basically, below the cutoff, you don't expect to be making money on it, but above, it's worth mining. I think they said that they're looking at something like 0.2 grams per ton. 0.2 grams per ton. So if you have 0.4 grams per ton, that's 50% margin. That's how cheap this stuff can be that Cabral has and Altamira has as well. Again, I think Cabral has thicker and more of it, and they have multiple deposits. But that's not to say that Altamira doesn't have more of these deposits as well. But I think that's actually, it's the primarily how high margin this saprolite could be that is the, you know, main reason why Osisko Gold, I think it was Osisko Gold royalties. Osisko Gold royalties. They're not dumb money, obviously. They're royalty companies. All royalty mining, let's say, serious royalty companies. What they care about is mines. They get paid if a deposit becomes a mine. So that's all they're thinking about. Could this become an actual mine? Not could we flip this, could we speculate on this, because their NSR is worth nothing unless it becomes a mine. So again, it's like the retail market doesn't give a crap about economics or anything like that. The retail market can't even, most people can't even see how cheap this sector is. And that's not just for, you know, projects that are, let's say, developed and could be, well, I should say, even developed projects are way too cheap. Even if you can look at, it's like, hey, these guys have a resource. The NPV says it's worth this much. Still is trading for pennies on the dollar. So it's like, this is not sexy to retail people, but it's sexy to large royalty companies. I mean, imagine if, okay, these guys bought an NSR, I don't know what exactly their threshold for monetization is, but like Cabral Gold 33 million, okay. That's the whole market cap, and these guys, Osisko paid to have a 2% net smelter royalty. So I mean, it's just common sense. I mean, whatever they believe they can get out of that net smelter royalty, Cabral would still obviously keep a vast majority of it because it's a 2% net smelter royalty. So I don't think this. I mean, I don't think either Cabral or Altamira are even close to the actual intrinsic value that they have. And yes, it's a bit speculative or whatever, but it's like Cabral Gold, given the thickness and how extensive their saprolite blankets are. I mean, they could theoretically probably do 30 million in free cash flow per year. I'm not saying that they are gonna do that, or maybe, I don't know, 10, 15, whatever. It's probably cheap. I mean, even especially if they have the high grade stuff. But it's like 15,000 ounces per year. That's with $1,000 margin. I mean, yeah. I mean, that's 15 million. In that case, it's almost a PE of 2 from just $15,000 production. And they obviously have load goal targets and all of that, yada yada. All you need to know is like, who cares? Osisko Gold Royalties cares about Cabral. They invested. Who invested in Altamira? Aura Minerals. Who are they? Well, I think they have 3 mines in operation, 3 mines on the way, and I think every single operating mine they have is making free cash flow. And they're actually paying out a dividend. So obviously they are good mine operators. Obviously they know what a good mine is and what a good business is, not just us retail, we focus on will they have 1 million ounce, 2 million ounce, yada yada. But it's like, hey, 2 million ounces could be worth less than 300,000 ounces if the 2 million ounces are worthless from an economic standpoint. It's too small, infrastructure is too bad, it would cost too much, it's not enough grade or whatever, so you don't have any margins, yada yada yada. I mean, a mine that's not making money is worthless, obviously, even if you have 10 million ounces. So just look at who cares. A royalty company, which only cares about cash flow and actual production, a deposit being mine worthy and being able to get into production, and Aura Minerals, who is a producer and are good at producing, so they probably know what a good deposit looks from a mining perspective. So I mean, in my opinion, both are cheap. Just based on common sense, basically. Unless you know more than Aura Minerals and Osisko Gold Royalties, both of these companies are probably cheap. And the same goes with Stillwater. If this valuation makes sense, Glencore must be out of their friggin' minds. And why in the world would an ex-Ivanhoe, the ex-head of geology and exploration at Ivanhoe, care about Stillwater critical minerals if he thought, well, 28.7 million Canadian, that's probably a fair assessment of what they have and could have along these like 25 kilometers of of exploration potential with you see the soil anomalies and all that. No, obviously that's ridiculous. He wouldn't get out of bed. He would certainly not, I think, be attracted to come on board here. No, he believes this is a Platte Reef analog, and they're even finding cross-cutting high-grade structures that are not present, as far as I understand, at Platte Reef. So it's Platte Reef with a twist, with high-grade structures running through it, where they get up to 2.6% nickel equivalent and all that. So it's and it's like the Platte Reef deposits fits in either of these ellipses. That's the scale we're talking here, and they drilled they barely scraped the surface at these anomalies. Wide open along strike, open between each other, the resources they've proven up, wide open at depth, and they have a whooper of an anomaly actually. Let's see here. here. So there's potential also there, you know, obviously this is kind of suggesting that maybe mineralization originated from here and spread out like that. So who knows what it's like down there? Is there, you know, one of these lava chambers, you know, classic nickel sulfide stuff, or is there a Voisey Bay at depth? Who knows? But you're certainly not paying for it. You're certainly not. If there is, you're gonna get the full benefit. If these connect, you're gonna get the full benefit. I mean, almost nothing is priced in. So that's the theme, obviously, now. That's the thing. It's like I'm going insane by just seeing how many cheap stocks there are right now. To me, it's like, this is a no-brainer. This is a no-brainer. This is a no-brainer. I got a whole list of no-brainers. Every single stock I own, I think, is a no-brainer. Because they are cheap. Because nobody cares. And I wouldn't be surprised to have one of these, you know, Rick Rule moments. Oh, they were cheap 3 years ago, or in 3 years we're going to look back. Yeah, they were really cheap today, 3 years ago from then. But in 3 years, who knows? They might have done what uranium and uranium juniors eventually did, went up 500% over the next 3 years. And that's well worth it. That's way above 99% of people what they're going to be averaging over the long term. Yeah, so consider me biased. I own shares of Altamira, Stillwater, and Cabral. They're also banner sponsors, so consider me twice biased. If nothing what I say or makes sense, don't buy it. If you look into the companies, and you should always do your own due diligence, because you cannot copy conviction. You have to see why you own it. If you don't see why you own it, you're going to end up selling cheap and buying high. That's just how it is. You're going to make mistakes. You can guarantee that pretty much. And you won't be able to even, let's say the bull is 3 months out. You won't be able to hold on to the stock, especially if they become even cheaper, because again, you don't know why you own it. So volatility is going to be your worst enemy instead of your best friend. Yeah, not investing advice. Have a great day, and as always, it's like this is a game of patience now. This is a game of patience. And now would be the time to have some hobbies, because the case for juniors is not going to change tomorrow. It's like next, let's say, they will not have gone from the cheapest levels in, I think even Rick Rule said something about the cheapest levels in like decades or something, 40 years, or somebody said something along those lines. The case is not going to be play out tomorrow. We might be in for a 5 to 10 year bull market after after this bear market is done, and it's going to be well worth it. So come up with something to do in the meantime. You're just gonna. I'm going insane. I find these valuations offensive. It's not. I recognize the opportunity, but it's like I'm losing faith in humanity when I see this stuff. That's what makes it so boring, because it's like, if you have 70 IQ, you should be able to spot that this is, obviously an opportunity. If you ever heard the expression buy low, sell high, it's just the patience thing. It's just the waiting that basically I think is the reason why most don't actually make it out, because to them 6 months is an eternity. A year is way more than an eternity. 2 years, unthinkable and all that. But listen to the ones that actually make money, like Rick Rule. Yeah, 3 years early, and I think he said that, well, on average it takes 5 years for him to get a 10-bagger. So let's say 3 to 5 years. From these levels in these juniors, there's plenty of juniors that can become 10-baggers over 3-5 years. But only if you hold them for 3-5 years. That's the thing. So a day here and there doesn't make any difference. That's why you don't need to watch the stocks all the time. And of course, what if we're down here? It's like, these are like ripples basically. Who cares what if a junior you own is like dirt cheap? It goes up 10% or down 10%. Doesn't matter at all. It might be a $1 million difference. And the company might be creating values like over the next 12 months. Maybe they created 30 million in actual value. I'm not saying the stock is up and reflecting that. I'm saying that's how much future extra return you might be expecting. So who cares about 10% up or down? It's a rounding error, but it doesn't feel like it because 10% a 10% day of a stock up 10% feels like a big deal because it's been such a shitty market. In the grand scheme of things, 10% up or down around here, that's not going to matter in them. That's going to be absolute noise. These stocks, when we go into a bull and some of these stocks are doing well, they're going to be adding their entire current market cap in a day, easily. There's going to be times like that. So 1 million here or there doesn't matter, but it just feels like it matters now. Anyway, thanks for listening. Bye.